Luke Alexander, who's the President and Chief Executive Officer.
Yeah, hi everyone, and thanks a lot for coming. I'm going to talk about Newcore Gold and our Enchi project in Ghana. It's a development stage project that's got district scale exploration upside. I guess firstly, I will be making forward-looking statements, so please go to our website and make sure you read that. Newcore Gold is backed by a management team who's truly aligned with shareholders through our 19% ownership in the business. This is money that we've invested alongside shareholders over the last number of years. We did complete a financing last week. We went out to raise $5 million. It was oversubscribed, so we increased that to 5.5, so we didn't have to cut people back by too much, and the management team also participated in that financing. We did put out a PEA which outlined extremely robust economics for the project. We'll get into that in some detail. Since the release of that PEA, we've traded about 35 million shares, which represents about 50% of the free float of the company. We are in Ghana, which is a Tier 1 jurisdiction, and we'll talk about that in a little bit of detail right now. So Ghana, Africa's largest gold producer. It's the 6th largest gold producer behind Canada and the US. With that, you have an extremely supportive government. It's important for taxes, it's important for jobs, and it's important for the overall economy. But what we always say is don't listen to me, a single asset bias CEO, but look at what the major companies are doing in Ghana. You've currently got 3 of the top largest gold producers, including Newmont, Gold Fields, and Anglo, with significant operations in the country. Newmont is investing another $1 billion into Ghana, which will take their Ahafo project to over 1 million ounces per year. We've also recently, in the last few years, had the Ghanaian government set up a sovereign wealth fund known as MIF, the Minerals Income and Investment Fund. And I'd just like to take a moment to acknowledge that the CEO, Edward Corentang, the Chief Technical Officer, Mr. Barning, and one of the legal representatives from the MIF team is here. I think that shows the commitment that Ghana has. They're directly investing in projects to see those projects move forward because they recognize how important it is for the economy. For example, they've invested $33 million into Atlantic Lithium. They've also invested $40 million into Asante. They've set up a program to invest in small-scale mining, as well as they're in the process of setting up an ETF, as well as a gold business that has traded $900 million of gold in the last year. So this is just another example of why Ghana is such a great country to be operating in, and we're very fortunate to have amassed such a large land package when we did. Looking at our Enchi project in a little bit of detail, it is a very large land package, 248 square kilometers in size. We've identified over 25 targets to date, of which we've only drilled on 9 of them, and 5 of them represent our current resource. As I mentioned, one of the big catalysts this year was the PEA that we released at the end of April. The numbers really speak for themselves. The base case that we used was an $1,850 gold price. We outlined a very simple open pit heap leach mine. At $1,850 gold, you're looking at an after-tax NPV of $371 million, after-tax IRR of 58%. And as most of you will know, one of the things that helps drive that is the low capital of $106 million that's required for a heap leach project. Nice production profile of 122,000 ounces per year. This is the production profile. As I mentioned, 122,000 ounces, peak production in year 6 of 155,000 ounces. And really nice cash flow generated from the project. At an $1,850 gold price, you're looking at $524 million of after-tax cash flow. At $2,350, you're looking at $855 million. In terms of the sensitivity gold, you get very good leverage to the gold price with our project as well. What I just outlined was an $1,850 gold price. When we look at that, it drives, as I mentioned, a $371 million after-tax NPV. One real simple way to look at it is for every $100 move in the gold price, we're adding roughly US $50 million to the NPV of the project. So we're adding more than the market cap of the company today for every $100 move in the gold price. When we put it out, gold was trading around $23.50, which is obviously $200 below where we are today. But at $23.50, we would challenge any of you to find a project with economics as good as this that sit within a company with a market cap of $60 million Canadian. $630 million after-tax NPV, 92% IRR, and just over a one-year payback. When we look at that compared to our market cap today, that has us trading at less than 0.1 times the NPV of the project. I think that's a big part of the reason we saw 6 new institutional investors participate in our recent financing, as well as strong support from management and board, as well as our existing institutional holders. So again, if anyone can find a project with better economics than this within a company of our size, please come and talk to me afterwards. In terms of the exploration, we've got big district scale exploration upside. There's 2 prolific gold belts that run through Ghana. You've got the Ashanti belt and then the Sefwi-Bibiani belt. 200 million ounces of gold historically discovered in country. Edward was telling me earlier today there's a 600-year history of gold production in Ghana. It's called the Gold Coast for a reason. Our project sits on the Sefwi-Bibiani belt on the southern end. Great neighbors along trend. You've got Chirano at 5.5 million ounce endowment, Bibiani at a 6.5 million ounce endowment, and then here's that Newmont project at 20 million ounces where they're investing an additional $1 billion. When I talk about district scale, there's a few reasons for that. One is we've identified over 25 targets on our project to date, of which we've only drilled on 9 of them. We've also only drilled down the pits on our that constrain our current resource are only down to an average depth of 75 meters, and we'll touch on that in a second. All of our deposits do remain open along strike, so systematically stepping out and looking to add near-surface ounces that will ultimately extend the mine life for the heap leach is something we'll focus on. We've also identified a number of parallel structures across our project that warrant additional follow-up drilling. So those are a couple of what we view as lower risk exploration opportunities on our project, but add meaningful value when you can take that material and put it straight onto the heap leach that we will build. In terms of the medium to longer term exploration opportunity, that comes from the opportunity at depth. When you look at these greenstone hosted deposits along trend, I highlighted Chirano and Bibiani and Ahafo. Where you see a lot of them really increase in grade and grow in size is as you start to identify these high-grade feeder zones that extend at depth. What we're looking at here is a long section of our Enchi project. We're then comparing that to Chirano, which sits 50 kilometers to the north of us on the same Bibiani shear. What we've then done is we've taken the average vertical depth of the depth of the pits that constrain our current resource, which is 75 meters. We've superimposed that on our project. We've then compared that same depth to Chirano. And it's pretty clear to see where, once you've identified these high-grade feeder zones, where they can really grow in size. To put that in perspective, Chirano today is mining at roughly 800 meters below surface, 1.5 to 2 gram per ton material. So we've really just scratched the surface with the 75 meter average depth of our pits today. We have started to do some deeper drilling. We've put a couple of dozen holes below kind of 200 meters, and we've started to have some good success. We put out an underground resource of 136,000 ounces, which is not a mine today, but what it is a proof of concept. About half of those ounces come from our Nyam deposit. When you look here, these are the pits that average 75 meters, which constrain our primarily heap leachable material. As we started to get deeper, 5.8 over 7 meters, 5.6 over 8, 5.4 over 9 meters. This hole here at 6.5 over 4 was not included in the update. But you can pretty clearly see that we've identified one of these high-grade feeder zones, which to date is only down to about 250 meters. 500 meters to the south, we've identified another high-grade feeder zone. When I pull you back now and we look at this from a bit further back, it's clear to see there's a lack of drilling to the north, to the south, in between, as well as deeper on this project. So that's an opportunity for us, is to obviously continue to drill and look to prove up a much larger high-grade mineralized area that will ultimately feed an underground mine over time. In terms of the team, my background, I spent the first 20 years of my career on the investment banking side of the business, working with mining companies, 12 years in London, advising ASX, TSX, London-listed companies, primarily in the mining space. Doug Forrester, Blaine Johnson, chairman, lead director, involved in Newmarket, Caliber. Greg Smith's our VP exploration, over 35 years of experience. Mal Carvasca is a critical member of our team as well. So a very strong team to drive this project forward. In terms of corporate snapshot, we currently sit at about 190 million shares outstanding. We have completed that capital raise, so we will be at $9.5 million, which funds us for the existing drilling and additional drilling. As I mentioned, management and board own 19%. We have participated in this recent raise. And then we've got an extremely strong shareholder base. So we're currently 45% institutionally owned. Franklin Templeton at about 10%, Ruffer at about 7%, Aegis at 8%. This recent capital raise, we then added an additional 6 new institutional investors who are not on this list today. So again, I think that speaks to the value that there is in our project and the big upside that investors recognize. In terms of near-term catalysts, we did kick off a 10,000-meter drill program in July of this year. We're about 15 holes into that, so on the back of us closing the financing at the end of this month, we'll start to get drill results coming out, and then we'll have a steady flow of drill results for the next number of months. With the additional $5.5 million, I'd expect that we'll be able to at least double the overall size of the drill campaign. So that's something that we're, needless to say, very excited about. We are moving towards a PFS. The economics of this project warrant us putting it into production. And with that, we're obviously doing a lot of work in the background, hydrological work, geotech work, additional met work, condemnation drilling. So that work will also be releasing to the market as we get it completed to ultimately put us in a position to be able to table a PFS in the future. So in terms of key takeaways, management and board truly aligned with shareholders through our 19% ownership in the business. Strong capital structure backed by very deep-pocketed, long-term focused mining investors. We are on a belt that has a lot of multi-million ounce deposits. We've just started to really scratch the surface with the drilling that we've done to date. Obviously, the PEA was a good catalyst for the company and justifies us taking it to a PFS. And then we will have lots of news flow with the 10,000-meter drill program that we announced in July. With that, I think we've got a minute if there's a question or two. Oh. What's the royalty regime? So in Ghana, there's a 5% royalty that goes to the government. We then also have a 2% royalty with Triple Flag. All right. Any questions? Feel free to follow up. And again, the MIF team's here. So if you have any questions on Ghana, I'd encourage you to chat with them as well.
Thank you very much, Luke.